The bottom line, Chris, is that I've been building for this for 5 years. I've been sitting, waiting with Amazon for the last year for this moment where they gave us an increase. We've been kind of pounding them, give us more. And now it's here.
So if Amazon were at some point going to say, this tech is handy, let's snap it up, this would be the first step in that process. And even if they don't, just being their primary service provider, it's only going to get bigger and bigger.
This is the beginning. We're 1 year into a 10-year run.
And anyone else that wants to do due diligence on you, you just have to point to Amazon and say, you think you guys are better at it than those guys.
Exactly. Yeah. No, there is nobody better.
Yeah.
We're becoming the standard now, where what's actually happening is we have so many 3D models that we've produced. And this is actually interesting. I was just having this conversation with my COO. So we have this whole library of 3D models that we produce for Amazon and others. And Toggle, as you know, does the texturing.
Mm-hmm.
Right now in Toggle, we have like 5 3D models that you could play with. You played with one of them.
Yep.
Okay. I was just talking to my team about connecting the Toggle platform to the Nextech 3D model content management systems, which has tens of thousands of 3D models, so that when you come in to Toggle, you could go into our library and pick a model and retexture to make it yours. That's worth its weight in gold. Because what we're noticing with Toggle is most people don't come with a 3D model.
Mm-hmm.
So if we're supplying them with the 3D model, and to get that, they got to pay the $29 a month. Like, that's not free. We'll give them, I don't know, 24 free 3D models to play with. Right now there's 5. But imagine having a library of tens of thousands, and you could texture it and then export it to the web. And now you have a net new product, and you're paying $29 a month. If you go to CG Trader or Sketchfab, each model is $15.
Sure.
So here you're getting tens of thousands that you could customize, and those you can't customize. Those are, you see what you get, you get what you see.
So if I'm into video effects, if I'm designing a game, if I'm an architect and want to put together,
custom,
if I'm just a regular graphic designer that wants some pieces that they can toss into it covers all those bases.
Yeah, I mean, it becomes your way of creating a custom, like you said, your video game is branded, whatever it is. You could put that branding on the furniture, on the all the content becomes yours. It's not just generic stuff.
Sure.
So that's actually gonna, I think, ignite Toggle. So I've now, now that I'm
and then those pieces flip into the AR way of doing things as well, right? There's a natural move between all pieces.
Exactly. Arway actually is already connected to the Nextech library, but we didn't connect Toggle. Now we're going to connect Toggle, so it'll be all customizable.
This is great. And we often talk about AI companies that do actual AI, right? And how few of them there actually are. But then if you add in the metric of also is making revenue, and then also has little feed-offs that are making money, and has customers that are the size of, I don't know, the biggest in the world.
Yeah.
There's very few of them out there.
Very few. I mean,
you've got a full ecosystem happening.
Yeah, I think we're actually standalone. Like, there isn't, I don't know anybody else even that comes close at our stage of, micro cap, whatever. There's nobody.
And we don't talk about the metaverse anymore because Zuckerberg did, but that's still out there, and all these aspects very relevant to that space.
Yeah.
And VR and AR, and you're in the midst of about 6 different hot subsectors.
Yeah. So our stock has gotten destroyed because we just did a financing. which is a necessary evil. So
Yep.
just to real briefly talk about that, we did. So I was told that there's no money in financing. It's like it's very hard for people to raise money these days, except for verses. But
It's if something's good, people find the money. It's a strange thing.
right. So we were able to raise 2.5, and with this new purchase order, it does really represent a giant step going cash flow positive. I mean, I can't quantify it exactly other than to say it's going to be on the razor's edge come Q4. Q3 it'll definitely bridge the gap pretty dramatically between being cash flow break even versus losing. But Q4, when we get the full quarter and we're in full swing, it should actually tip. But I can't actually come out and say that other than to say that it's getting damn close. And
Healthy.
that's the holy grail. And we're one of the companies, we used to spend tons of money, lose 3 million a month just to get here. But now it's swinging the other way because we actually have a business that's actually growing dramatically because you get a major customer. Look, we have 200 other customers. They love us, but you can't move the freaking needle. We love them. All right, doesn't do anything for us. It's like, but Amazon's a completely different story.
That's a different beast.
Yeah.
Look, on the subject of the financing and the share price, explain to people, if you will, like why the financing came in at 42 cents and not, the tippy top of where it was on the day.
Yeah, it's just not the way it works. So we made a price reservation, and the stock moved up a little bit on whatever, some news, it hit 70 cents. But typically, and this is unfortunate, and this has nothing to do with us, people short stocks ahead of a financing, press it down, and then, cover on the financing. That does happen,
Yeah.
even though people don't like to talk about it. But the bottom line is that to get a financing done, you have to be, an attractively priced offering. You have to be below the market. And
Sure.
so that's why the price was set at 42 cents with the 52 cent warrant. I mean, it was an attractive price. And
That's an explainable price when you're priced at 51 cents, but your stock jumped to 72 in like 2 days.
yeah.
So, the time it takes to get a financing in play is a lot more than that. Once you're in there, you're kind of stuck.
Right. Listen, I did a financing. You're not going to believe this. In 2019, the stock was like 90 cents. And, or I did a price reservation at like 90 cents, something like that. 92 cents, I think 92 might have been the price. And the stock ran to $2.50. I had a price reservation at 90 cents and announced it, and we were marketing it. People kept coming to me saying, "Is this real? Can you actually do that?" And I'm like, I can. I'm tempted not to, but I did commit, and I don't want to, say I'm going to do something and not actually do it. So I did the deal at that price, even though the stock price was much higher. So I mean, these things do happen.
Look, anytime you get a financing, if the stock is up, people are going to sell the stock to get the stock back plus a warrant, right? So that's just standard practice. And unfortunately, sometimes you can't really time the market. It's a good thing, I think, that if people that have bought you at 48 cents can sell you at 70 cents 3 days later and then buy you back
Right.
and have that run all over again, right? If you were worth 70 cents 3 days ago, you're not worth that now, especially with the news you're about to drop.
Yeah. Well, here's the bottom line. I bought 250,000 on the deal myself. I'm already the largest shareholder. I already have like 11 million shares. but I keep buying more because I see what's happening with our business. I keep telling the public, but at the end of the day, the public wants to see the stock run. And then they say, oh, it's happening. Let me get in, chasing after the stock, right?
Right.
So nobody likes stocks when they're on sale, which is like the weird part about Wall Street. You go shopping and you want everything to be 50% off in a retail store. But when it comes to stocks, you want it to be trading at 150% of the value because you don't want 50% off. You want it to be at 150, right?
Look, I don't know about you, but if a 70-cent stock is selling at a financing for 42 cents, I'm cracking open my bank account. That's a deal. And if the warrant is at 50 cents that it was at just a couple of weeks ago, like that sounds like a great deal too.
Yeah, 52 cents. Yeah.
Anybody who was worried that the stock that they held at 70 cents is now worth, 40 cents. Hey, just wait. Like,
Right,
let the dust settle.
exactly. Be a little patient, and that's my point. Is that tomorrow's news is going to, I think, make people's heads turn back towards what's important.
Yeah,
which is our 3D modeling business is growing rapidly. Our business is moving towards cash flow positive rapidly. We are the dominant 3D model supplier for the dominant e-commerce platform on the planet. It's only going to get better from here because they haven't even opened up Seller Central. If you think about that, it's like the Super Bowl. We're crushing it in warm-ups. The game hasn't even started, really.
it's not a bad place to be. I think I always tell people, like, if you're buying stock for a day, the CEO doesn't give a shit what you think, right? If you're just trading the ups and downs, you're not part of the ecosystem of management. Management's there for the guys that are buying in for the long haul. And quite frankly, the share price today is a hell of a better deal than it was 2 weeks ago. Even taking the Amazon news out of the picture completely.
I agree, but that with the Amazon news,
Yeah, well, that's going to be fun.
yeah, it will be. So, yeah, I'm glad we got to connect, because it's important to make sure that everybody understands what's happening in real time. We don't want people using last month's or last week's, even last week's news. This is dynamic, and things are changing week to week for us in a positive way. So
is this? I'm guessing this is the first of many updates that will relate to this particular piece of news, right? As things scale, as it gets bigger and deeper, and Amazon opens up more corners of its website to 3D.
absolutely, this is really just the shot across the bow, in my view. In fact, I've been talking to my team internally, and I'm thinking that they're ratcheting up the model, the production capabilities and testing us because we're getting ready for Seller Central.
Right.
They're getting ready for Seller Central. So they know when they open up Seller Central, the floodgates are opening.
Sure.
Well, they don't want us to be overrun because it's not good for them, right? So I believe that they're increasing our, testing us, giving us more orders to see what we're capable of. So I think there's a potential that they come back again in another couple of weeks, maybe a month, with even more production volumes, and maybe we come out with another press release announcing another couple of $1 million. And maybe it happens a few times over the course of the next 12 months. And maybe they open up Seller Central, and then it's just run as fast as you can.
This is how they do things, right? Like they don't put your brand of pickles on the front page of the grocery section unless they know that you're able to sell 2 million jars. So to get there, you got to be delivering on an ongoing basis over a long period.
Yeah. And so it's been a year. They've been testing us. Now they're increasing the velocity on the demand side. And I'm taking that as a signal that we're getting closer to Seller Central opening. And when that happens, Chris,
yeah, grab your ankles.
Yeah. I mean, that's it. 10 million merchants, 300 plus million SKUs, all sidelined, sitting on the sideline. 10 million. I mean, that's the entire state of New York. I mean, I mean, it's like a third of the population of Canada.
Yeah.
300 million products is 10 times the population of Canada in products on Amazon.
And just to reassure people, you've got patents on your technology, right?
We have filed a whole portfolio of patents to protect our technology. Yeah.
So that's the moat. You've got there first. You've got the big client, and you've got the patents if anyone wants to come sniffing your business after the fact.
Yeah, I think the biggest moat, believe it or not, I mean, the patents count. It's the relationship with Amazon. Look, it's like a marriage. When you get into a relationship with a big tech company, it's very, very different than the other relationships we have. They're, they hold you to a high standard.
Sure.
But if you can achieve that, if you meet those high standards, they will stick with you forever.
And they don't want to really switch horses midstream if they can help it. Because once you're plugged into their system, it's hard to unplug.
Exactly. And from their standpoint, we're helping them to achieve their goal. If we fail, they fail.
Right.
It's like a symbiotic relationship.
For sure.
They want us to succeed, and they've told us that. They've literally imagine a $1 trillion public company telling our market cap today is what, 40 million, whatever.
Mm-hmm.
We want you to become a big technology company and grow with us. Well, that's what they've told us. And imagine as the largest shareholder, when I hear that from $1 trillion tech company to our little, that I couldn't ask for. I mean, it's like, It's very, very heartwarming. It's a very, very good feeling to have a big brother like that can move the needle. Again, it's one thing when you're talking to your friends and you're all sitting around the fire. I'm going to be huge. I'm going to make, I'm going to make a go of it. I'm going to, and everybody's going, yeah. But nobody can actually help you get there, right? This is the king saying, I'm going to knight you guys. I'm going to, you guys are like one of my knights in my kingdom, and we're going to share the spoils together. That's how I look at the relationship with Amazon, is that they're opening up. And when they open up Seller Central, they're giving us autonomy. They're going to have us just load content, 3D models onto their platform without any oversight. It's all going to be done by the machine learning, the computers, and we've talked about that. So, that's coming, by the way.
That's going to be an even bigger news. I think back about all the technology companies that have gone from zero to unicorn over the last 20 years. They generally all do one thing well. They don't do everything. They don't have to do everything. They do one thing well that large companies pick up, and then the small companies follow their lead. And you're exactly in that spot right now. Like, whether the end limit is $1 billion company or just a very successful technology company, that's a win from here for any investor.
My goal has always been to be $1 billion tech company. Since I founded the company, I've been telling everybody internally. And, what's interesting about what you just said is, it's all about doing one thing really well. So in the beginning, we were trying to find that one thing that we could do very well, which is why we did so many different things.
Right.
And then we ended up learning, we actually have some tech that's really cool that we could commercialize and do that really well. Let's spin that out. It's not related to the other two public companies. Let's spin that out. That's its own public company. That's Arway. We just did it again with Toggle, and now we have Nextech. So each company does what they do really well. Previously, it was one company, Nextech, doing three things, not the prototype that you're right. And a lot of people ask, like, why are you spinning off all these companies? Back to what you just said. Well, you know, it's mystical, it's magical, but if you do one thing really well, the odds are you're going to become a success. If you do three things really well, it might not happen because of whatever. It's hard to explain, right?
Yeah. Well, if you think of the origin stories of like companies like Twitch or Slack, they started off as one thing, they became another thing, then they became another thing. You know, you find the sweet spot and you keep zeroing in on it. And in private tech, you know, you just kill the things that aren't your core.
Right.
But in public, you have the opportunity to spin them out and let them live and die on their own fumes. Toggle's a valuable asset in and of itself as a public company. Arway, I really like, having talked to the CEO there last week. You know, I think this is how the ecosystem evolves. You know, the fittest survive, the not so fittest, they maybe evolve or maybe they die off, but you don't want them to be in your cave as that happens.
Yeah, I was going to ask you about Arway because we never really got to catch up after you met with.
I love it. I've got some very close people very close to me that are involved in wayfinding as an industry, and have companies in that space. People don't realize how involved and how big that is. Just designing traffic flow. It's not just a case of saying this way to the restrooms. It's, if anyone's ever been to an IKEA and tried to find an exit, you ain't getting out until you've been past the beds and the couches and the toys. And then when you think you're out of energy, they put a restaurant down in front of you to give you another half-hour worth of burst. Like, it's scientific. It just, they want every last dollar out of you before they let you out of the building. And along the way, they've got to keep your interest. It's not just a case of, so do you want a desk? It's a case of, let's show you a video. Let's give you a coupon. Let's show you what your kitchen might look like. It's and Arway is the first thing I've seen that actually really digs in and increases that industry, like gives it another level.
Yeah.
I was talking to my friends and they're very much in the 2D space, right? Here's your sign so you don't get lost in Victoria. Here's your sign so you can get through your bank headquarters. But being able to also say, while we're here and putting the 2D signs together, why don't we think about what we can add value with 3D? It's an upsell for them. It instantly adds to their arsenal of profitability while also paying you. You might not even know that you're involved in the process.
Yeah. No, I think it's going to be massive. I mean, I've said so many times, you know, Google's figured out that the outdoor wayfinding, but there is nobody that dominates indoor wayfinding. We think Arway can be that solution. In fact, we're just launching literally today a SaaS solution for Arway, because it was launched as an enterprise solution, which is great. But now I'm opening it up. You could play with it for free. If you're a student, it's like $25 a month. If you're, you know, an agency partner, it'll be like $250 to set up a map, and then $99 a month. These are very affordable prices to get a lot of people using the platform. And then, of course, we have the enterprise solution for corporations that want to create a spatial map for their building, of their warehouse, their retail store, whatever. So we're opening it up now after this last version 2.5, because it's time. You know, it's just, the timing is now, right before, you know, Apple's Vision Pro comes out. I think is this perfect timing. So
the hardware will drive that software. Yeah, I always kind of look at things like, I guess, the metaverse and Second Life as an early incarnation of that, and think the disconnect, the thing that stopped it from really taking off, is that it's not linked to reality.
Yeah.
It's you're standing in your living room experiencing other reality, whereas what you're producing here connects those two. It
Yeah.
turns the reality into that metaverse-like experience where you can do a lot more than you can just do in person.
Yeah, exactly. Every time I saw a metaverse, Roblox or whatever, I was just like, I'm not going to do it. So I can't get excited about it. Um, Arway, completely different.
Yeah.
When you're in it, whether you're at a concert or you're at an IKEA, um, you're in it. And once you start using it, it becomes very addictive.
Mm-hmm.
Like a video game. You're like, where's my wayfinding? Like
Sure.
become dependent on even like,
Same
Google.
way we are with GPS.
Yeah, yeah. I mean, even if I kind of know how to get there, I still just go and default, the lazy man to, oh, let me just take out my, phone and
Right.
punch it in so that I don't miss a turn. Like I just don't want to be bothered with, that. So I think, yeah, Arway is going to be something exciting. But again, inside Nextech, um, completely different technology that would have struggled because
Your focus is on bigger things.
yeah, focuses on Amazon. The good news though is that we're going to introduce Arway to Amazon. They have warehouses, I
Yeah,
think.
sure.
You I mean, who has more warehouses than Amazon, right?
No, nobody.
Yeah. So they could actually be very excited about something like this. It's obviously a different team than we're working with, but once you're in with these big tech companies, there is opportunity for expansion.
This money you just raised, how important was it to you? Like, where's the function of that cash?
It's very important because it bridges the gap between where we are today and Seller Central, and this big order. When we announced the financing, we didn't have this, right? So, but we've been anticipating it's going to happen.
Mm-hmm.
Can't predict when. So you need the capital essentially to give you that runway, the flexibility, the financial flexibility
Sure.
to be able to be there and to be able to scale up when the demand hits. Perfect timing. We raise the money, demand hits, we're going to be able to deliver, rinse and repeat. If
And
we
then
didn't
when
raise
your stock gets back up to 50 cents, it's warrant time.
yeah, it's warrant time. We'll get more fuel in our gas tank, right? But the point is that you can't predict. I didn't know that Amazon was going to give us this PO. I just knew it's coming soon. We need to be prepared. My job as CEO is to be strategic. That's my number one role, strategy. Where are we steering the ship towards, right?
Yeah.
And so raising the capital was a strategic move. It was a little painful. And I accept that for investors. I feel the pain, right? My 11 million shares went down by $3 million, $4 million, right, in value. But I don't care. I mean, when I say I don't care, I care just like everyone else. But I'm in it long term. I'm not selling. I haven't sold in 5 years. My goal was to build, as we discussed, $1 billion tech company. If I succeed at my goal, and I never have failed in business, when I set a goal, I'm relentless. So assuming I'm not going to fail, and again, my track record is I don't, I'm going to hit that $1 billion number. And my 11 million shares, maybe it's worth 100 million bucks. And so why would I care if I got to take, little steps back on the path if my goal is a much, much bigger number? And so that's what investors need to think about. Obviously, they're not as deep in it as I am, and they're looking at it peripherally, but that's why I have these calls with you, Chris,
Sure.
to be able to give more perspective to our investors.
Well, look, and as for anyone out there who's been looking at this company and not ready to get on it just yet, when it was at 50, 60, 70 cents, hey, like 40 cents is pretty good pretty good opportunity if you've been sitting on the sidelines waiting for value. I don't think you're going to get this again.
Yeah, I mean, think about value. Let's talk about that real quick. We have 13 million shares of Arway. It's worth almost 10 million bucks. We have 13 million shares of Toggle. It's worth, 13, 14 million dollars. Add those up, $24 million. Okay. If you subtract that from our market cap, what are you paying?
Yeah.
You get Nextech, the Amazon business, for 10 cents. It's like 10, 15 cents. It's like nothing. It's like 10 million, 15 million bucks.
Yeah.
I mean, it's kind of ridiculous. And when you look at Toggle and Arway, they're just in their first innings. Their valuation is going to be going higher, in my opinion. And so will our 13 million shares in each one. So it really is one of those rare opportunities to participate in a mega trend, multiple mega trends through one stock.
Well, I'm happy that we started talking about it when we did, because anytime a company you're talking about goes from 50 cents to 70 cents in 3 days, it helps bring other people paying attention to me. Everyone's a winner.
Yeah.
Well, look, we'll keep talking, and I'm interested to see what you think the over/under is going to be on the share price after this announcement, but maybe we'll have that conversation offline.
All I would say is, it should be up. Tomorrow should be a
I would
better day.
imagine.
Yeah, I would imagine it's going to be an up day. And again, if people pay attention, this is one in a series of positive news releases. It's not the only one. So
I would imagine any potential client that you go out to from here on in, the first words out of your mouth are going to be, well, it's good enough for Amazon. And the next words out of their mouth will be, oh, okay, tell me more. Like it's a great little door opener to be able to say, number one, we already work with. Number 487 down here, let's talk.
100% gives us street credibility when it comes to 3D modeling. There is no higher bar, really.
If I'll just say off to the side here, I've got some other clients that are in the VFX and gaming space and movie production space. So if there's ever an opportunity to introduce you to them, I'll get you over.
Excellent, Chris.
Thanks, man. This is Evan Gappelberg from Nextech AI Solutions, and kind of Arway and kind of Toggle. And I'm sure you've got a couple of other pieces of tech there that might be something we see more of in the near future.
Never know.
Ooh, smooth. Thanks, everybody.